Welcome. I hope everybody had a fantastic weekend. Happy President's Day. Here in the U.S., it is President's Day. Let me make sure I get there we go, screen is shared. What does President's Day mean today? Well, just to put a quick write-up on here as far as what this means right now. Here, let me minimize this window down here real quick. As far as what is happening now, we went through kind of the retail sales inflation report last week, but today is a banking holiday here in the U.S., which means the U.S. markets are closed, which probably is going to equal out to low volatility. Low volatility, if I can spell it correctly. Low volatility in the U.S. session. What that really equates out to for us folks is that, sometimes we do some scalping in the class and so on and so forth. I really wouldn't trust any scalping trades today, and what that means is that hyperactive in and out type of trading. Whenever there's low volatility and lack of participants in the market, which when we're in the midst of the U.S. session, generally is going to mean, try to keep your trades a little bit more time oriented, a little bit longer term. So lack of participants is going to equal out to, no scalping today. So we're not going to really talk about any scalping strategies. And here I can erase the rest of this because that was all from last week. But we can go ahead and go in and review some trades we're in right now and review some trades from last week. Let me start off here on dollar Swiss. As you can see, I'm just kind of pulling up things since the end of last week. You can see towards the end of last week, we had a little bit of volatility of the dollar kind of selling off after the retail sales. UK inflation report, dollar selling off, and then retail sales didn't help us out much there either. So we've had a little bit of a dollar sell-off in here. And since then, you can see a lot of this sideways action on a lot of these currency pairs that's been going on since then. Dollar Swiss is one right in here where we had a trade open at the end of the week last week. Let me go ahead and zoom in. A lot of interesting things happening here. Like I said, I'll say it once more that it's kind of like winding around like a rubber band. It's when you look at it as a whole, it's one of those currency pairs to where I'm extremely bearish on the Swiss. I do still feel that we can get a nice upward swing in it, and we have this nice little trend line right in through here that's been occurring. And when you look at it real close, one thing we've been noticing on dollar Swiss is those 78.6% retracements have been coming through for us. What I mean by that is once this gets down into our retracement zones, it's been making some pops every time it gets down into the retracement zone. I actually got stopped out on my dollar Swiss trade, and the reason for that is because I had 2 lots on it. And what I did is I took one lot off from last week when it made this other retracement down in here. Whoops, sorry. When it made this other retracement down in here, I had gotten into another position on dollar Swiss, and I had taken a one lot off at a 1-to-1 risk reward because I had my stop right below this low. And I put my stop at break even, kind of thinking that maybe perhaps we could get another run up here. I've been really testing this dollar Swiss to see at some point if we can get a sustained break above that 9,300 level, that we can make a nice pop in it. Is it going to happen today? Is it going to happen during the U.S. session? Probably not, based on what I just told you about kind of a lack of participants. But even overnight into Sunday, you can see that it went down once more, and that 78.6% retracement level. It's been every time it's been coming down near this trend line. Buyers are just not wanting to let the dollar Swiss get too low, and that's one of the things I find interesting as far as that that rubber band mentality of it kind of tightening up like a rubber band at some point it's going to make a break. When we look at it on total view, you can see here dollar Swiss obviously is showing a lot of selling pressure, and it's been consolidating up and down, up and down. It's showing a lot of ask activity or bid activity on the dollar Swiss, which means we've been getting a bit of a sell-off here. But it's really been kind of staying within this little 20-point range right down in here. On total view, when you look at kind of the longer-term positions, you can see the Swiss is down here near the dogs of the market, still sitting here over the last 24 hours as being one of the more heavily offered or sold currencies, which would be more bullish on the dollar Swiss pair. So I'm going to go through a couple of different scenarios on that, but for right now, I was at break even. I made a 1-to-1 risk reward for a quick 30 pips at the end of the day on Friday, and so I'm all square right now on this trade because I got stopped out on break even on one line and took a 30 pip profit on another. So I'm going to be looking for other opportunities to perhaps buy the dollar Swiss pair as we go forward. You can see on here, there's a couple in here that, when looking back the last 24 hours, which is really the longest we go when we're looking at the bid and ask activity with the market makers, the New Zealand's actually been pretty well bid over the last 24 hours. Canadian's been pretty well bid. The yen has actually been pretty well bid, especially versus the dollar. The euro has been kind of hovering in that neutral territory. We got the pound, the dollar, the Aussie, and the Swiss down here in the kind of more offered currencies. However, that leads us into our other trade from last week, and I'll get into that here right now also. Let me go ahead and we'll come back here to dollar Swiss, but I just want to let you know from our trading perspective, we had this buy entry at the market right in here. I was already long on the pair. We could have got a nice 1-to-1 risk reward bump here to the top side. Then it made us kind of all square at the end of the day. This is another one that we took during class on Friday on the euro dollar. So let me kind of switch our focus over to the euro dollar. We'll come back to dollar Swiss, don't worry. Euro dollar, this is one that's not fooling me either at all. As a matter of fact, I'm actually still in a trade here on the euro dollar. You can see I'm up about 3 pips. This is another one that we had going on that I've kept open over the weekend from Friday's trades. Let me zoom in a bit on it. The strategy on euro dollar, and again, we executed this one during class, was from this high right up in here, we want to be, we like the idea of aggressively trading euro USD. I'm extremely bearish on euro also. Don't really care what's happening in Greece. It doesn't change their overall fundamentals. We got this one during class to where we were looking for it to get up back into this retracement zone. For those of you who don't know what the retracement zone is once the price gets into the 61.8 to 78.6 levels, that's what we call the retracement zone. That's where we like selling and buying into dips, essentially. You've all heard it before. I know I sound like a broken record when I say it, but whenever you see an analyst on CNBC or Bloomberg TV or whatever your local financial news is, and they always say, well, we're bearish or bullish on this particular investment, so we're looking to buy or sell into dips. That's what we use our retracement zones for. Our sell entry was whatever came first. We were looking to either get in when it went -20 on the 5-minute totals, or a -5 on the 1-hour totals, which did occur. You can see that the euro dollar is still a -5 here. So it's still giving a nice little sell when it comes to our swing trading opportunities. So this is our trade right in here. You can see how I'm at break even. When we had this was on Friday. When it came up into this retracement zone, we went ahead and sold, put our stop 1 pip above this high, and it almost came down and got to our take profit level. See, our take profit level here is at 1.13818. And then it came right back up again into our retracement zone. So you look on here from this high to this low right in here, came right back up into the retracement zone again, and it's since been kind of going sideways. You know, a lot of indecision here on the euro dollar. So if you're not already in this trade, I still have this one on. You can see I have I sold one lot on this. I have my entry price at 1.14140. My stop loss is right up here at 1.14462. Take profit at 1.13818. I still like this trade. I still like euro dollar to the downside. So that's one that's still open. We got a nice healthy 4 pips in the trade now. So we've covered our cost plus 4. Woohoo! Maybe I can take my profit from this and go buy a White Castle burger. All right. So moving on, we'll circle back around to euro dollar too, because if you're not already in that trade, I think there's another opportunity to get into that also. Momentum breaks is another thing that we were looking at euro dollar. We were essentially looking at whatever came first, whether it retraced or if it broke through momentum to get in on a short trade on euro dollar. And remember, euro dollar is still showing a lot of bid pressure of people selling euros with that -5 in the 1 hour totals. So, you know, I'm not expecting a huge amount of volatility today, especially as we near into the noontime hour, which is when all the European and London banks close up. The other one that we had, we only really looked at 3 different opportunities from Friday. The other one that we had was on this inverted head and shoulders that we had on the dollar yen. This was also kind of a short-term / swing trade opportunity. The euro dollar, I'm sorry, dollar yen. What am I saying here? Let me go ahead and I'll change this up here to dollar yen so we can see it. Whoops, that's not dollar yen. There we go. Dollar yen, when we look at that over the long term, see, we have this nice spike up in dollar yen right in through here. This was the non-farm payroll number. You remember this? We got a huge move, about 200 plus pips going up on the dollar yen. And then we had the Bank of Japan that came out and gave their little spiel. This is where we hit our take profit. It came up to this was our Gartley trade from last week, to where we sold right up in here. Well, actually, it was sold right here. And we got a nice little 108-point move to the downside, thanks to the Bank of Japan basically giving a little bit of speculation or guidance, if you will, that they may back off on their monetary easing program. And then also thanks to the retail sales number being bad for the dollar, that helped us get a nice little sell-off on the dollar to where we were able to take a profit on this. What we were looking at the other day, though, was we were looking at this almost perfectly formed, a neutral neckline. This would be a textbook example of an inverted head and shoulders. Is as it was coming down to this level right down in here, it was approaching this 118 level. You can see when we kind of zoom out on this, you know, we had a nice spike up. You know, we had this kind of ABC correction. I'm sorry, this was non-farm payroll back here. Little ABC correction where we got into a sell trade. And you can see right in here, this is the 118 level. It looks like it's kind of right above the 118 level, if you will. We have this little support level. So we were looking for a break above this high, actually. We weren't looking really to be sellers on dollar yen. We were looking for more of a sustained break above this high to potentially buy it, because we saw that it was finding some support right down in here. Dollar yen is still one that I prefer trading in either direction. However, when we have this bit of consolidation right down in here, it can get a bit scary to trade something along these lines. So we didn't get a trade in here on Friday. We didn't have an execution. That's probably a good thing, because we did end up having a really good trading week last week. And we didn't give away any profits on Friday, which is a good thing. So that was one that worked out actually pretty well that we didn't get in, or else we would have just been sitting there watching it. So zooming back in on this dollar yen, I still think there's opportunities, but I'm going to move this support level right in through here. And we'll start here with dollar yen since we have it up, because we're already short euro dollar. So let me just kind of give you a little bit of my thoughts on dollar yen. And here, I can actually zoom out a couple of times on here. So what we have here, or if you watch Cool Hand Luke, you could say what we have here is a failure to communicate. We have a nice little consolidation pattern happening on dollar yen. You know, in trading, we always like it when things wind up like a rubber band, because we can often look forward to some kind of volatility spike. And with dollar yen, this is one that we really like trading in either direction. We have, if anybody has ever, you could actually start the trend line from way back in here to where we have 3 bounces, you know, 1, 2, 3 bounces. And if anybody knows patterns at all, this is what we would call a descending triangle. What I would look for on here, though, is a trade in either direction on dollar yen. Here, let me bring this down here. And this is more of a swing trade opportunity. So what I would look for on dollar yen is a trade in either direction. So you see it, how it's been kind of consolidating. I have the 1-hour chart up on here, by the way. This is a 1-hour chart. We look at dollar yen on PitView, especially today. What you're going to find is whenever the market is in this tight consolidation, it's really a liquidity provider's dream, because they can do a bunch of business on the bid, a bunch of business on the ask, and they don't have to worry about the market moving all too much. It's almost like a market maker's version of scalping. You know, they can buy up a lot on the bid, sell up a bunch on the ask. They got almost a perfect 50-50 situation when it's consolidating sideways like this. So whenever we see that, whenever we see these types of tight consolidations, and we don't see a large amount of momentous moves, we want to be really diligent in how we take trades, meaning we want to wait for something to break out either above or below the consolidation zone, if you will. So on dollar yen, one of the things that I would like for today, here I can make this chart a little bit bigger, is we're going to look for either buy or sell trades. A sell trade would get us in if it breaks through this support level. Now, this is where it becomes a little bit discretionary in how you would place this trade, because I'm looking at it on a 1-hour time frame. So if we get a break through this support level, now what would constitute a break? Well, a lot of people might look for a close, and today that probably would be the best thing to do, is on the 1-hour charts, look for a close below this support level. In fact, you can almost just look for a close beneath this most recent candle. So a sell entry for us today, and it would be nice if we get it during class, is a close below support. And a -5 on the 1-hour totals. Or if it does close through support on that 1-hour time frame, you can also look for, as long as it closes below that support level, or you can look for, or if it's at like a -20 on the 5-minute totals. Now, as far as your stop order, put it pretty tight on this, because if it does break through that support level, you could probably get away with putting your stop a little bit closer, and it would still probably be about 40 to 50 pips away, since it is a swing trade. Let's see, where's the high right in here? 118.634. So we'd be putting our stop at 118.664. Put it 1 pip above that high plus spread. And then look for a limit of 1-to-1 risk reward. So based on where your entry is and where your stop is, look for a limit of 1-to-1 risk reward. As we get a little bit later on in the day, folks, one thing I would certainly recommend, though, is don't spend a whole lot of time. I'm probably not going to spend a whole lot of time staring at the market today. I would consider it an exercise in futility. Remember, we'll be meeting up again on Wednesday to cover some other strategies. But let me go ahead and put this in because we're going to take trades in either direction on the end today. So I'll put this on here. Trade dollar yen in either direction. This is on the 1 hour charts that I'm looking at. So that would be a sell into a support break. I'll go ahead and paste that on there. And then you probably know we're going to go. So buy into a resistance break would be our other strategy on dollar yen. So buy into resistance break. So let's go back to our chart here. All right. So we can take this off. We can take this off. We can take our little X off. So our buy is going to be the same thing essentially. So our buy entry will be a close above trend line. +5 on the 1 hour totals. Or you can also use +20 on the 5-minute totals. For this one, the stop's going to be easy. We're going to put our stop right below wherever the most recent low has been. 118.343 would be our stop. And then a limit of 1-to-1 risk reward. Take what you can get today. Don't try to be too greedy. Low volatility when you're staring at the market can often suck, like really bad. Because it's like sometimes the market's like watching paint dry. I don't know if any of you traded Forex like a year ago when we were in the February and March months a year ago, but volatility was so low that the average moves, like right now on the euro dollar and a lot of these pairs, the average moves right now are like 100, 105 pips that these things can move in a day. Back in March of last year, oh man, the average move in a day was like 30 pips, sometimes like 25 pips, and so low volatility when it hits, it can really be like watching paint dry. So we got that one in there as our buy strategy. And let me go ahead and take this down. Actually, I can keep this up here because we'll just go through some other opportunities here today. I already got these copied down. I'll go ahead and keep the trend lines up there since we know what we're looking at. We can keep an eye on dollar yen right up in here. Let me pull up a chart on the 1 hour time frame. A lot of these trade opportunities today, folks, are all going to be they're all going to be swing type of opportunities. Looking at euro dollar, you can see this, just like a lot of the pairs, just doing a lot of consolidating sideways. We have this nice little trend line in through here. If you're not already short on euro dollar, if you want to wait for a little bit more confirmation, what I would certainly suggest, if you will, would be to wait for it. If you want to wait for it to close below this trend line, I think that this can certainly make a nice move to the downside. You see it's hovering right here actually at the 114 level. A break below this trend line would actually be a nice place to get in, because it would be a break below 114 also. Not a huge amount of movements in the last couple of days. I mean, this high right up in here to this low, this is about 60 pips total of movement that it's had going back to Friday. It's moved only a total of 60 pips between its high, extreme high and low. So it is consolidating. It's winding up like a rubber band. So another one that we're going to look for here on Euro USD, I could almost copy and paste. Sell entry. We're only going to take sells on this. Only look for sells on the euro dollar today. If you're not already in this, break below trend line, or you can say a close below the trend line. And either a -5 on the 1 hour totals, or a negative. I'll go ahead and write, see if this will come up. Sometimes the text is too large on here. Yeah, it is. Take that off. Or -20 on 5-minute totals. And then for this, if we do get a break below that support level, you can actually tighten up your stop a little bit. I still have my trade parameters in here. Still got my stop up here. Still got my limit down here. But if you do get a break, you can actually shift your stop a little bit on this. You can put your stop right up above this swing high, which above this swing high would be 1.14280. So 1.14310. There we go. Very nice. And just look for a limit of 1-to-1 risk reward. Now, that's if you want to wait. You can see I'm right near break even. If you want to put the same parameters that I have for the trade, I'm already short on euro. I have no problems being short on euro. One of the only things happening right now from a news standpoint is, we have the Euro group meetings right now. New Zealand, one of the reasons why it's so heavily bid is that had a nice retail sales number last night. We have the Euro group meetings. From a news standpoint, I don't see a whole heck of a lot on here that, for the next couple of days. We got Thomas Jordan, he's the head of the Swiss National Bank. He's speaking tomorrow at noon. I wouldn't be half surprised if he tries to talk down the Swiss franc. I think the Swiss National Bank and especially like the finance minister for Switzerland would really like the Swiss to get weaker. They would like it probably to come back up to where the Euro Swiss is closer to like the 110 level. So I think he might try to talk down the Swiss. So that won't be a surprise to me. So that's why I have no problems buying the Swiss. We have the CPI coming out, the pound tonight, or I'm sorry, tomorrow morning, if you will, for me. For a lot of the other things, we got a lot of manufacturing numbers, some retail sales numbers. PPI comes out this week, the inflationary reports. We don't have a lot of, other than Thomas Jordan. We do have the meeting minutes coming out on Wednesday. That could be big because it can kind of show you where the hawks and doves are with the Federal Reserve. we can talk all about that on Wednesday morning. But as far as the next 2 days, you could probably see a whole lot of, besides maybe the CPI on the pound, and if any news comes out from the Euro group regarding the Greek situation, you might get a spike on the Euro. Honestly, even the optimism around the Greek debt crisis has not really caused the Euro to go up too much. The Euro going up was more from the dollar selling off than it was from the Euro getting stronger. So, next couple of days before we meet again on Wednesday morning, I don't really see a whole lot that's going to move the market, except for maybe this. Noontime tomorrow, we got Thomas Jordan speaking out of the Swiss bank. You might see a spike up on dollar Swiss and the Swiss get weaker. I think, if anything, Thomas Jordan is going to favor the sell side of the equation on the Swiss franc, which could cause it to come up. So the purpose of me showing you that is, if you're putting in swing trades, until we get into Wednesday, I don't see any problems with any fundamentals that might shake us out of the equation here. So if you want to go ahead and put that trade on now, that wouldn't be a problem either, if you wanted to copy my same trade results. If not, if you want to look for a little bit more confirmation, you can. I certainly don't see any real risk today in any big moves occurring. So I'll put that here near the top. I can actually put that right here, sell into a momentum break, because that's exactly what that would be. We're already short on this retracement trade, so we can take that off. There we go. All right. So there's a little trade on Mr. Eurodollar. Now let's go over here. Let me change my chart over here. Let me go to my good friend Mr. Dollar Swiss. Dollar Swiss has been tightly wound in here. See this little formation right in here? This is what we call a pennant formation. Again, the winding up like a rubber band. See, Dollar Swiss, Marie, I know you've asked questions on this before. It's like a negative 51. 1 hour's at like a negative 21. The total view, though, still shows the Swiss franc as being heavily sold over the last 24 hours. So I still think the offers, whenever I say well offered, that means that people have favored selling. Market makers have favored selling the Swiss franc over the last 24 hours. I know that shows up a little bit different, because right in here it's showing the Swiss as being heavily bought, a lot of bid action on the Swiss when it's at a negative imbalance. But this actually down here favors shorting the Swiss over the last 24 hours, which is something we look at. So if you're looking at the Swiss, another opportunity that I would look for to get long on this, I really do. I still like going long Dollar Swiss. As it's been consolidating sideways here, I would take buys on Dollar Swiss. You can either look at this on a 1 hour. It doesn't really matter what time frame you look at as far as this chart goes, because you can easily see the convergence of these trend lines in here showing a tight consolidation. And you see the bid and ask activity. This is perfect for a market maker right in here, by the way. When they're going gangbusters on the buy and sell side of the equation, and you don't see the market moving, what does a liquidity provider do? They love it when they can make transactions between the bid and ask and get that little tiny fractional pips that they're getting between the bid and ask price off just that, just going on the bid, going on the ask. That's why we've seen a huge amount of shifts in those imbalances. So we want to wait for this on here. This is why we don't want to really believe any scalping strategies that we see here on Dollar Swiss today. Buy entry. If we get a close through the resistance level, and either a +5 on 1 hour T or plus 20. These are all simple support and resistance trades. The 5-minute T, whichever happens first. As far as a stop on that, another tight consolidation on here. Put your stop right below this low, the low of the pennant formation. If you want to tighten up, you could potentially put your stop below this sideways consolidation right in through here. That's another option for you if you wanted to go a little bit shorter term. Or if you want to look for more pip movement, you can actually put your stop below this low and look for a little bit more pips. I'll leave that up to you, but you can put your stop in either one. So if you're listening to me right now, if you want to look for a little bit more pip action out of it, meaning 30 or 40 pips, and treat it like a swing trade, that maybe we can make another spike up here and finally break through that 93 level, this resistance level, then certainly we can do that, because if it does break through, I still think Thomas Jordan is going to bring this thing higher as far as the dollar Swiss. I don't think, when you look at a central bank that for so long was fixed to the euro at 120 and then got so unbelievably strong with the dire situation that the Eurozone is in, I think that when you look at the head of a central bank when he comes out and talks, like Thomas Jordan when he comes out and talks tomorrow, I would have no problems being long dollar Swiss when he comes out in his press conference tomorrow morning or tomorrow afternoon when he comes out and talks. I certainly don't think he's going to do anything to bring the Swiss stronger. I think that if anything, he may announce the fact that the Swiss National Bank probably still reserves the right to intervene. Kind of like they did when they fixed their exchange rate, to buy currency reserves, meaning sell Swiss franc and buy other currencies to try to weaken their own currency. So, it may even set up as a news trade. So I certainly don't think I would trust going short on the Swiss going into that, because I think Thomas Jordan would certainly favor the sell side of the equation. But, if it does break through this high, I think you could be in for a larger move to the upside. That's my point. I know some of you probably say that a lot. Steve, what's your point? So put your stop at 0.92811. That's the maximum stop order. And then look for a limit of 1-to-1 risk reward. I don't expect the dollar Swiss to have any types of huge sell-offs here in the next 24 hours of breaking through, but just in case it does, you can still buy into retracements on dollar Swiss. Even if you wanted to go from like this swing low, if it does happen to break the bottom part of that level, let's say that there's some kind of sell-off on the dollar that has nothing to do with the Swiss that may cause it to come through that supporting level. You can still look for potential opportunities to buy into retracements. As it's kind of, like I said, buyers have been really quick to buy into dollar Swiss whenever it retraces. That's one of the things that's been causing a lot of this tightening. For right now, we're going to keep this strategy as is, but as it comes down and retraces, if it comes down and tries to test the lower part of the trend line, you can still look to buy any type of retracement on the dollar Swiss. I honestly don't expect that to happen. I'm still bullish on the pair on the dollar Swiss. But that's an opinion. Isn't that funny when people say, well, that's my opinion? Because I always find it funny when people say, this is my opinion of what's going to happen, because we are in trading. Everything in trading is an opinion. Trading opinions are like assholes. Everybody's got one. That's why there's no such thing as an expert in the markets, because everybody's a speculator. Nobody's like Karnak from The Tonight Show with Johnny Carson. They can't predict the future. Everything's an opinion. Nobody knows what the next tick of price is going to be, but if I had to, I would rely on fundamentals to favor dollar Swiss to the upside. Now, I don't know if any of you read my, there's a blog post on our website where longer term, let me get this posted real quick, and I want to talk a little bit more about dollar Swiss because I think you'll thank me at some point. I hope you'll thank me at some point on dollar Swiss for being able to keep you abreast of this situation. There we go. Somebody a little bit newer here just, oh, Kimberly asked a question too. Kimberly, I'll get to that. That's more of a comment. Oh, well, that sucks. I'll get to that here in just a second, Kimberly. Do I use any other indicators? When I'm using PitView, folks, the question is, do I use any other technical indicators to confirm my trades? Because I don't really consider Fibonacci's a technical indicator. I look at it as just an area that measures where support and resistance is. I'm a big support and resistance trader. I was talking to a friend of mine named Steve from Chicago the other day because he's an old school trader, oil trader in Chicago. And I was telling him when I was raised in the Chicago trading world, I learned how to trade off the charts, meaning everything that's technical, you know, the indicators, momentum like stochastic, oscillators like stochastic, MACD, it's all derived from the charts off of price action that's already hit the chart. I'm what most people would consider to be a naked trader. I always tell people if they want to add indicators into their trading, the best thing to do is to learn to trade from price first. Once you learn to trade from price, when you can keep your charts naked, you can add in other technical indicators that you like to track, that keep you consistent. But all I really need to trade with is PitView and a clear chart. That's all I need, and the ability to draw support and resistance levels. It's old school, but I'm also have severe ADD, so I can't focus on a huge amount of things at once. Can you be successful doing it? Absolutely. As long as you're consistent. All right. Now let me bring something interesting up on dollar Swiss here. Old school works. That's Amelia, you can't be closer to the truth. That is the truth. Old school works. I'm going to zoom out a little bit on dollar Swiss because let me give you a little bit of an opinion alert on this. I wrote a blog post. I can give you the link to my little blog that I created on the PitView website. But when you look at dollar Swiss, a lot of people, let me just say this, and there's some newer people in the class, and let me just say this because there's a lot of people that got scared out of the dollar Swiss. They got scared out of any trades on dollar Swiss because of this big precipitous move when the Swiss National Bank unfixed their exchange rate to the euro. We all know how this happened because some brokers went under. A lot of people lost money. I wrote an article on this too, where I don't think the liquidity providers and major banks lost money because we saw how heavily bid the Swiss was before this even came out for weeks at a time, which we all found pretty interesting. But a lot of people got scared off on trading the Swiss franc because of this big precipitous move down. Well, the thing is, the unfixing the exchange rate did cause the Swiss to get stronger, and I always think when it comes to the Swiss, they were willing to literally supply billions upon billions of Swiss to the market in trying to maintain the fixed exchange rate to the euro. The unfixing of the Swiss franc had nothing to do with the ability of the Swiss. It had nothing to do with the Swiss franc being fundamentally strong as a currency. Now, when I say that, what I'm trying to get to is it had everything to do with the fact that because the euro was about to, the week before, the week after the Swiss franc unfixed this exchange rate, Mario Draghi, the head of the ECB, he announced QE, literally printing, billions upon billions of euros each month to try to stabilize the economy to fight deflation. Looking forward to it last in September of 2016. With that amount of QE, what that would have done is it would have made it virtually impossible for the Swiss National Bank to keep printing unlimited or, selling unlimited amounts of Swiss francs to try to keep up when there's a huge amount of supply of euros coming out too. It's a fight of supply versus supply. And so they had to unfix it just because it would have literally made the Swiss National Bank go broke if they had to fight the amount of supply coming out of the euro with their QE by selling unlimited amounts of Swiss to keep that exchange rate fixed. It would have been a fight of monetary easing beyond in a state of epic proportions. However, let me get to the point on this, because this is where I think you'll thank me at some point. It's already retraced about 50% of this move. Now, I feel both the euro and the Swiss. I think the Swiss can go back to parity, to par with the dollar. I think it can go back up to this. I think it can retrace all the way back to up into these levels, because I think the euro is going to go down also. Again, opinion statement. The fact that the buyers have dropped off in here, I think, is interesting. They've consolidated it sideways, if you will. So there hasn't been a huge amount of activity. We made a lot of money. We made a lot of pips on this retracement move right in here. This was probably our all-star trade in the last month or so, was making a lot of pips in through here on dollar Swiss on the upside. Now, what I've been kind of anticipating here when we look at the chart is a sustained break above these levels. The next stop when we get above these levels, I believe, would be 94.50 before we hit any type of resistance. But if we do break these levels, quite frankly, with everything that's happening in the Eurozone, I think we could start looking for longer term scenarios to where we might keep a lot on as a long-term trade to see if we can't get the the dollar Swiss to retrace. It could go up there fast too, back up to these to this parity level. I think it would be no problem for it to get up there. So let me grab this real quick. So looking at this, a break through this consolidation right in here is something we've been looking for quite some time. So what's my point on this? My point being that if we do get a break above that, the minimum we would look for is probably several hundred pips of movement. 94.50 kind of being the first stop that I think. I think that's the exact 61.8 or something like that, or the exact 50% level, right around 94.50, a 50% retracement. But it could certainly get back up to the 9,700, at least the 9,800 levels on the Swiss franc, up into these levels. I just think that this tightening up as a rubber band here, the fact that I draw this little trend line in through here, you see how much buying pressure there is. Buyers are not backing off on the Swiss franc. Sellers might be coming off. They might be taking profits as soon as they can, but buyers are certainly not letting the Swiss franc get too far away from them. And I think a lot of these buyers right in through here are actually the liquidity providers themselves. The big money is not allowing this to retrace down. That's something we're going to be keeping a watchful eye on going forward, but I just want to make you aware of it. All right, let me look at some of our other charts on here. What's happening with dollar yen? Have we broken through anywhere on here? No, we're still right there. Let's see here. What's happening with euro dollar? Euro dollar's coming up a bit. Like I said, it's sitting here right at my break-even level. It's like watching paint dry today. So not much happening there. Dollar Swiss breaking through a little bit on the downside. I'm not looking really to sell it. You can if you want to speculate and try to sell dollar Swiss. But here's that longer-term trend line. If it comes down near this trend line at all, you'd be looking to be a buyer, because you see how tight, you see how much, whenever you see a shadow below a candle, it always means selling or buying pressure. And so you see a huge amount of buying pressure every time this thing retraces. So even though that we're breaking down a little bit here, I would still look for buys on dollar Swiss. All right. Let's check some other ones out. One of them that's been interesting, they had a better than expected number last night. Let's go ahead and look at New Zealand. New Zealand was an interesting one, when it broke through this little resistance area right up in here. New Zealand had some good numbers. You can see on total view, we already looked at the Swiss, which is still down here among the weaker currencies in the last 24 hours. New Zealand's one of the stronger ones. Looking at New Zealand for trading opportunities, I think that if we get any type of spike in dollar strength, we could potentially see New Zealand come back down. One of the things that it's having a hard time with now is, now that it's come back up after the good number that it had, it's having a hard time making a sustained break through the 7,500 level. It's at like 7,507 right now, but it's having a hard time making any headway above 7,500. So for those of you that trade New Zealand, this is another one that we've been looking for opportunities to potentially buy New Zealand. We can talk about this more in Wednesday's class, but what I would like to see is a little bit more of a retracement to the downside on New Zealand. But if we can make especially on a daily chart, you see this is the 7,500 level. If we can make a break above that 7,500 level, New Zealand's actually got quite a bit of room to the upside to go. So on the daily chart, if we look for a break above 7,500, that might be an invitation to start taking buy trades. I wouldn't be surprised though, with the lack of volatility and the lack of liquidity today, if we see some type of retracement to the downside on New Zealand. It's been going pretty crazy down in here. So New Zealand, to answer your question, I'm not really looking for any trades. I'm going to keep it on euro, dollar Swiss, and dollar yen. By the way, those are kind of three of the most actively traded pairs here. So I think those three give us kind of some of the best shots to take trades in either direction, because if there is going to be any liquidity today, it's probably going to flow into those pairs. Pound dollar is another one. I know there's a lot of people from London here, a lot of people from the UK that come into the class. Pound dollar, huge move to the upside right in here. No question about it. This was the inflation report that brought the pound up. We can see that it's been retracing back to the downside right in here on the 1 hour time frame. Pound has actually been pretty well bid when you look at it. Some other things that you can look at here on the pound is the fact that, let's see here, this support level right in here, right up, right below 5,400, like 53,678. It's kind of making a nice little bounce here, but it has been consolidating short term right in through here. If you looked at it on like a 5-minute time frame, you would see that this has been kind of the daily movement of the pound right in through here. It's been coming down off its bottoms. Here, if you look at it on a 5-minute chart, this has been the consolidation that's been occurring here on the pound. If you wanted to make kind of a counter trend trade if you were looking for something shorter term, I'm not going to put this in our notes today, because this would also be kind of it may be a dangerous scenario in here. You can see it's kind of making a double bottom here on the 5-minute charts. If you were able to get a close through this consolidation, the pound's had already moved down from Sunday to today. It's already moved down about 100 points, or about 80 points actually, to this downside. It's making kind of a double bottom, and it's consolidating sideways. I'm not going to put this on our trading scenarios for today. If you wanted to go for kind of a counter dollar strategy here, we already have one on dollar yen if it breaks through those lows, but if you wanted to go kind of contrarian to the dollar, if you wanted to look for a short-term trade opportunity, You know, the pound's already pretty well bid on here. This is one that's been going pretty strong against the dollar as of late. So if we can get some kind of, if you get a short-term break, even on a 5-minute chart through this consolidation zone down in here, and you see the pound get to a +5 on the 1 hour or a +20 on the 5 minutes, that could give you an opportunity there. That has the potential of being a good trade, especially if we get a dollar sell-off. You know, a couple of these trades we're looking for confirmation of the dollar, you know, buying up, or weakness in the euro, if you will, or the Swiss. But you know, if you're looking for something contrary to that, the pounds could give you a good opportunity. We always go around the horn here, so while we're going around the horn, let's go to dollar Canadian also. Something I find interesting on dollar Canadian, kind of zooming out on it here. Now it's coming down to these swing lows. This was our good trade from last week on dollar Canadian. We bought it when it broke through this trend line. We got a nice little 70 pip trade on dollar Canadian. One thing that I've been seeing on dollar Canadian, we all know that this one's going to be, it had a nice little bounce right in here where it had a bit of a trend line that formed right in through here that it's breaking out above right now. It also is coming down into a retracement zone. Even if you go from this swing low to this swing high right up in here, probably that's not the best retracement to go through. You can see that it came down here to the 78.6 level and it's now bouncing off. This would be another long dollar trade. Canadian actually had been kind of strong as it made a nice move to the downside here. If we can get a reversal here where the 1 hour total goes to like a +5, now that it's broke through that trend line, it's coming down, it's hitting out of the retracement zone right in here, coming up out of the retracement zone. You could potentially put in a buy for dollar Canadian, looking for it to make a break to the upside, especially if oil starts to see any type of move. If the oil starts to move down, you'll see dollar Canadian probably make a move to the upside here. CAD's been moving pretty close along with oil prices as of late. But anytime it's consolidated and broken through, it's made some nice little moves. You can almost see right down in here on the 1 hour time frame, we almost have like an inverted head and shoulders here. Actually is, if you look at it closely, it actually is. We got a left shoulder, head, just barely, and a right shoulder. Kind of a tight little inverted head and shoulders that it's also breaking out. So this is breaking out into some highs. Again, I'm kind of sticking with where the liquidity would probably be today. That's why dollar yen, euro dollar, and dollar Swiss are the ones I'm looking at. But these are just some other ideas for you, if you will, some other trades. All right. Is there any that we haven't looked at yet? I guess we have. If anybody wants to look at Aussie, I guess we can look at that too. Aussie's been correlating with gold. I'd kind of stay away from Aussie for right now. Where's Aussie on the total view? 24 hours. New Zealand's up here near the top. The yen's getting a little bit stronger. Canadian has been stronger. Aussie's right down here towards the bottom. It's also been correlating very well or very close with the New Zealand pair. This is probably a Gartley pattern or close to it right in here. Got an A, B, and C correction. It could almost fulfill a Gartley here. You got kind of an A, B, C that is formed right in through here. Aussie is not one that I'm fond of trading just because it can be a bit sporadic. It's hard to tell who's driving the market. It's not really one that I look to sell. But this is making kind of a break below a shorter term trend line. It's been kind of weak, although it's had some buying pressure over the last hour. I'm just going to stick with those three pairs, though, for today. Let's stick with our three. What we have here is the euro dollar, looking for any type of break below this support level. I'm already short, looking for a 1-to-1 risk reward. I've got 3.5 pips. Woohoo! 3.5 pips in the trade. I'm buying Sizzler tonight, baby. So I got 3.5 pips in the trade on that one. Dollar Swiss, this is another, so we're looking to be short. If you're not in this already, you can still set this up just like, with almost my exact trade parameters. Put your stop above this swing high, below this swing low, or you can wait for a break below this low if you want to look for more confirmation on it. Dollar Swiss. Again, see, with everybody, a lot of people were probably looking at the big red candle on this. You see it came down. You see it came down in this consolidation range. That's one of the reasons why I would be favoring more reversal, the buy side of the equation on dollar Swiss. For people that are trying to get in on this huge negative imbalance, all this is the liquidity providers making a lot of money off of not having to move the market that much on their transactions between the bid and ask. So be wary of that and wait for a break below that high. And then dollar yen was our other one. Let's check that one out and see what's going on. See, tight consolidation, folks. This is what whipsaws people in and out of the market a lot, is they try to make something from nothing, and this is certainly nothing right down in here. Dollar yen, again, we're looking for trades in either direction. So this is euro dollar and dollar Swiss. We're both trading our underlying bearishness on the euro and our underlying bearishness on the Swiss. Dollar yen, we don't care. Either direction. Breaks out through a high, buy it. Breaks this low, we will look for a close. So use a 1 hour close as confirmation on it. But trade that in either direction. But do be wary of the fact that bank holiday here in the U.S., so we may not get much out of it. So note to self probably for today would be, try not to watch paint dry today. There we go. Actually, split these up here. Bring this down. I think if there's something that may be able to get dollar Swiss to those levels, I think it could be Mr. Thomas Jordan. It's funny, Thomas Jordan replaced a guy named Philip Hildebrandt who resigned as the head of the Swiss National Bank. Philip Hildebrandt was caught in like an insider trading scandal that ended up being bogus, because when they fixed the exchange rate, his wife, who's also a brilliant investor and trader in her own right, and analyst, had placed some trades on the Swiss franc, and they thought it was insider trading. They investigated and found that there was no wrongdoing being done. Speaking of the fixed exchange rate, so Thomas Jordan actually was, people didn't think he'd last that long, but he's actually been a pretty nice addition to the Swiss National Bank after Philip Hildebrandt resigned. I do think that he would certainly favor bearishness on the Swiss. So I got that saved. Let's see here. Anything else we need to go through? Not really. We kind of got all our bases covered. Just be really careful today. Careful, and when I say careful, just don't be one of those people that tries to make something from nothing when there's just not a whole lot going on, if you know what I mean. Well, that's my story, and I'm sticking to it, folks. I'm going to go ahead and I'm going to log off here. It's great to see everybody today. I'll see everybody on Wednesday morning. Hopefully we'll have a little bit more volatility in the markets, but do not do any scalping today. We're getting to that point, not to sound like a broken record, but don't do any scalping today and look for your 10, 12 pip movements, or else you might be sorely disappointed in how much you get whipsawed when there's a lack of participants in the market. So, just try to be more diligent in what you're doing today. If you have some shorter term swing trades to do today, do them. Don't give away any of our gains from last week, because we have had some large gains. As far as somebody was asking here about the blog posts, here, let me grab you a link for that real quick. I do have a blog on here. Phil, one of my students, just asked any strategies on the FOMC meeting minutes. I think the meeting minutes are going to be more of the same, but when it looks, we'll talk about it more on Wednesday morning. That's why I didn't talk a lot about the meeting minutes. But when it comes to like the FOMC coming up, I still think there's more pressure on the Fed to be hawkish than there is for the Fed to be dovish, meaning patience is key with the FOMC right now. But I think people are are starting to shift to more of the hawkish side of the table at the FOMC. You know, we had for one thing, that February or the January non-farm payroll number, we all know the January non-farm payroll numbers are generally not very, it's generally not very good. 9 out of the last 10 times, it hasn't been too good at all. But it's certainly something to where I think the hawks are coming back in. So my point being that when it comes to the FOMC, I think that you should favor hawks, meaning favor dollar strength. The dollar is still king, in my opinion. That's a great question, Phil. I do think the dollar is still king. As Elvis would say, hail the king, baby. There's my blog, by the way, that I have up there on PitView. If you want to take a look at that, I just gave you the link. I do have to run here, though, folks. If you do have any questions, you can also shoot me an email at steve.nurre@pitview.com. Kimberly, I just got your message that tech support has not contacted you as of yet. I know you had a hard time upgrading to get your MetaTrader linked up with your PitView. My profuse apologies. I wish I wasn't such a technical idiot. What I'm going to do for you, Kimberly, right after class is I'm going to go ahead and give our tech guys a call and make sure they contact you today. But other than that, I'll see everybody on Wednesday, and happy trading, and chat at you later. Bye-bye, everybody.